Break time equals 5s/hello and welcome back. Today there is an important direct update that many seniors across the United States have been waiting to hear. A new financial relief discussion has been officially confirmed at the federal level involving a potential $2,600 stimulus check, new Internal Revenue Service processing orders, and clearer guidance about payment timing. This update is connected to broader relief measures that affect retirees, Social Security recipients, SSDI beneficiaries, SSI recipients, and older Americans living on fixed incomes. In this video, everything will be explained in simple and clear language so that you understand exactly what is happening, what has been announced, how it connects to existing benefits, and what you should expect in the coming weeks and months. The recent announcement centers around federal relief planning designed to support Americans facing rising living costs, healthcare expenses, housing pressures, and inflation-driven price increases. While previous stimulus payments were distributed during national emergencies, this new development is structured differently. Instead of being described as emergency pandemic relief, it is being discussed as targeted financial support tied to economic adjustments, tax reconciliation processes, and federal benefit coordination. That distinction matters because it changes how payments are calculated, who qualifies automatically, and how the Internal Revenue Service processes eligibility. The $2,600 figure being discussed represents a combined relief amount for qualifying individuals under certain income and benefit categories. For many seniors, this amount may not arrive as a single labeled stimulus check in the same way previous payments were delivered. Instead, it may be processed through a combination of tax credit adjustments, recovery rebate corrections, or coordinated federal benefit offsets. Understanding this is critical because confusion often spreads quickly whenever a large payment number is announced publicly. The Internal Revenue Service plays a central role in this update. The IRS has issued new internal processing instructions connected to 2025 and early 2026 tax reconciliation filings. These instructions are focused on identifying eligible individuals who may have qualified for prior credits but did not receive full amounts, as well as those whose income thresholds now place them within updated eligibility limits. Seniors who rely primarily on Social Security benefits often assume they do not need to pay attention to IRS announcements. However, in this case, the IRS order directly affects how payments are identified, calculated, and distributed. Many retirees live primarily on benefits from the Social Security Administration. Social Security retirement payments, supplemental security income, and Social Security disability insurance all operate separately from IRS tax filings. However, when federal relief is structured as a tax credit or refundable payment, the IRS becomes responsible for distribution. That means even seniors who do not normally file taxes may see activity tied to their Social Security record, prior filings, or federal benefit history. The amount of $2,600 has drawn attention because it represents a significant sum for older Americans living on fixed incomes. Rising grocery costs, prescription medication prices, utility bills, and housing expenses have placed pressure on monthly budgets. Many seniors carefully plan their spending based on predictable Social Security deposit schedules. When an additional payment is introduced, it can provide breathing room, help cover overdue bills, or strengthen emergency savings. The discussion around exact payment dates is especially important. Federal agencies have emphasized that payments, if finalized and processed under current IRS instructions, would follow structured deposit windows. These windows are typically organized by direct deposit recipients first, followed by paper check mailings. Seniors who receive Social Security benefits by direct deposit are often processed faster because their banking information is already verified through federal systems. Under standard IRS procedures, when refundable credits are issued, direct deposit payments are generally released in batches. These batches may align with regular Social Security payment cycles, but they are not guaranteed to match exactly. The IRS operates under its own processing calendar. Seniors should understand that while payment timing may be coordinated with benefit records, it does not always arrive on the same Wednesday schedule used by the Social Security Administration. Income thresholds remain a key factor in determining who qualifies. Federal relief programs typically phase out for individuals earning above certain adjusted gross income limits. For retirees who rely mainly on Social Security and modest pensions, eligibility often remains strong because their taxable income falls below upper limits. However, seniors with additional investment income, rental income, or higher pension distributions may see partial reductions depending on final rules. The IRS order connected to this announcement also addresses verification procedures. In recent years, federal agencies have strengthened identity confirmation requirements to prevent fraud. As a result, some seniors may receive letters requesting confirmation of address or banking information. These notices are not necessarily a sign of a problem. They are often part of routine identity verification before large refundable payments are released. It is also important to clarify how this potential $2,600 payment connects to ongoing Social Security cost of living adjustments. Each year, the Social Security Administration calculates a cost of living increase based on inflation data. That increase is applied automatically to monthly benefits. The stimulus payment being discussed is separate from those adjustments. It does not permanently raise monthly checks. Instead, it represents a one-time or limited-term payment designed to offset economic pressure. Seniors who receive supplemental security income should pay particular attention. SSI benefits are income-based, and additional payments can sometimes affect eligibility calculations if not structured carefully. Federal authorities have indicated that this relief is being designed to avoid negatively impacting SSI qualification. That means it is expected to be excluded from long-term income calculations for benefit purposes, similar to how previous stimulus payments were handled. Another group affected includes disabled seniors receiving SSDI. Disability recipients often rely entirely on federal support. If the IRS coordinates payment eligibility through prior tax filings or federal records, SSDI recipients may automatically qualify without needing to submit additional paperwork. However, those who have not filed taxes in recent years may be encouraged to confirm their information through simplified filing systems. Payment distribution typically follows three primary methods. Direct deposit remains the fastest and most secure. Paper checks are mailed to the address on record. In some cases, prepaid debit cards may be issued, although this method has been less common recently. Seniors who have moved in the past year should ensure their address information is current with both the Social Security Administration and the IRS to avoid delays. The exact dates mentioned in the announcement reflect estimated processing windows. For example, if IRS processing begins in early spring, the first wave of direct deposits could be released within 2 to 3 weeks of final approval. Mailed checks generally follow within several additional weeks. These timelines depend heavily on system readiness and administrative review procedures. The broader economic context explains why this relief is being discussed now. Inflation pressures have eased compared to peak periods, but prices remain elevated compared to several years ago. Seniors often feel this difference more sharply because their spending patterns focus heavily on essentials. Healthcare premiums, Medicare Part B costs, and prescription drug coverage adjustments continue to influence monthly budgets. Medicare premiums are automatically deducted from many Social Security checks. When premiums rise, net monthly benefits shrink. A one-time payment such as $2,600 can help offset annual premium increases. It can also assist seniors who face unexpected medical expenses not covered by Medicare. Federal authorities have emphasized that this payment is intended to support stability rather than create long-term program expansion. That distinction helps explain why the relief is structured through IRS mechanisms instead of permanent Social Security adjustments. Long-term benefit increases require separate legislative action and budget planning. Seniors should remain cautious about misinformation. Whenever a large payment amount is announced, unofficial sources often exaggerate eligibility or promise immediate deposits. Official confirmation comes only through federal agencies such as the Internal Revenue Service and the Social Security Administration. Accurate information will appear through official letters, benefit statements, and verified announcements. The IRS order specifically focuses on streamlined processing for seniors and low-income households. This includes cross-referencing Social Security benefit data with prior tax returns. The goal is to minimize paperwork and ensure eligible individuals receive payments automatically whenever possible. As we come to the end of this update, the most important thing to remember is that financial relief announcements can bring both hope and confusion, especially when large numbers like $2,600 are involved. What matters most is understanding how these payments are structured, how the IRS processes them, and how they connect to existing benefits like Social Security, SSI, and SSDI. This relief is being discussed as targeted support tied to federal processing systems, not as a permanent increase to monthly benefits. That distinction helps protect your expectations and allows you to plan wisely. Staying calm, informed, and patient is essential while federal agencies complete their review and distribution steps. For seniors living on fixed incomes, every dollar matters. Rising costs for food, utilities, healthcare, and housing have placed real pressure on monthly budgets. A properly processed relief payment can provide meaningful support, whether it helps cover essential bills, rebuild emergency savings, or ease financial stress. At the same time, it is important to keep your records updated, ensure your address and banking information are accurate with federal agencies, and avoid reacting to rumors or unofficial claims. Official notices and verified updates are the only reliable sources when it comes to payment timing and eligibility. Thank you for taking the time to stay informed and proactive about your financial future. Understanding how stimulus payments, IRS processing orders, and federal benefit systems work together gives you confidence and clarity. Knowledge allows you to prepare, protect your income, and make thoughtful decisions. Continue monitoring official announcements, remain patient as agencies finalize timelines, and remember that staying informed is one of the most powerful tools you have when managing retirement finances.